Hey everyone, the St. George election this year is incredibly important. Go to votestg.com to see who's running and what they stand for, or visit us at our voter booth at Digby's Market, Red Rock Bicycles, or down in the park.
The real estate market, it's like flatlined, and in not like a negative, it's dead, but it's literally not going anywhere. It's tight. It's a tight market. Supply is low, demand is low, and we're just moving on this steady trajectory laterally.
Markets move in one of three directions at all times. So
yes,
forwards. Listen, no.
Forwards,
so you have
diagonal.
So you have trending up. Markets trend. Okay, market trend, and real estate ultimately is not any different than the stock market or anything else.
Just longer
stuff trends, right? Okay, it's illiquid, it's harder in some aspects, but the market trends up, the market trends down, or the market trends sideways. Okay, and I know everyone's saying, "Oh, that's really obvious." However,
yes, that's exactly what I was thinking.
It cannot trend sideways for a lengthy amount of time. It has to go one direction or the other.
I know, and we're basically running at 12 months.
I don't think real estate is really any different in that thesis. That
it's
I wouldn't
odd
expect
that it's
to
12
see the
months,
market go. Yeah, but it's an illiquid market, right? So remember that things just take more time in real estate. You got to zoom out. Point. We're not looking at daily closes, daily daily volume on.
You're not going to the bank to withdraw your equity.
Yeah, right. So it just takes a little bit more time for those trends to develop, including a trend to where the market's moving sideways.
Yeah, I think that's a good point. So I mean, the main numbers that we're always looking at, supply and demand. And so supply is new listings, but demand is pending, like listings that are pending, and then ultimately to like an actual closed. So just last month, in the month of September, we had 281 homes sold. And historically speaking, if you look back in the graphic that you're probably looking at right now is just like the last 4 years, roughly 4 years. I think we got 5 years on there. 5 years on there. It's kind of the lowest we've seen in September. It's the lowest we've seen in September is actual sold volume, which makes sense because of the interest rates and where we're at. But October is probably gonna be lower. November is gonna be lower, and then December is gonna be lower. And you can see that from if you go one more page, Mal. If you can see like this is like the up and down. So like the top one's the new listings, and then the second one, the blue one, is the pending listings. But that the new listings is so funny because like this is supply, and you can see the downswings are clearly Q4. Like the downswings, like the new listings, nothing hits the market between November and December every single year. It's always the lowest. And then it swings up in the spring and the summer, and then it falls back down again. So, and this has been the trend for 5 years, no matter what was going on, COVID or otherwise. It's almost the total number, right? It's like oddly, within a couple hundred homes, right? That it's changed really over the last 5 years, which I think is interesting because supply and demand, where they intersect is where prices are. If we know that supply is getting less, especially from this graph, demand keeps going down because of the interest rates, pricing can't go anywhere. Pricing is not going to go up or down because going down, it takes a massive increase in supply for pricing to go down because there has to be
moving along the same curve.
There has to be way more houses on the market, way more competition, longer days on market. The median days on market right now for pending listings is 32 days. That was month over month, and that's up 23%. But over the trend, over the long run, we've basically been hovering around your home's going to sell in the first 30 days. And that's how we've been for
that short-term percentage is pretty wild though.
Let's flip to the buyers for just
That's true. That's true.
Let's flip to the buyer side of that for just a second. Like listing your home, right? Nothing really comes on the market, but what also happens is you could see it in the next little while here with different macroeconomic environments happening, a short-term relief in interest rates, which means you could find a nice buying opportunity potentially in the next couple months.
Are you saying rates are going to come down?
Potentially temporarily. I don't have a crystal ball. I'm not guaranteeing that for anyone, but there's a possibility of not a significant amount, but if you're
enough to maybe get the ball rolling a little bit.
You might if you find a nice property, a nice deal. You might find a little bit of relief in interest rates and might be able to make a nice deal kind of happen for yourself if you're on that fence of, are you going to buy in the next, couple months or whatever.
This is also my take on this on the buy side is that taking advantage when there's low supply that's active on the market, that doesn't mean that people don't want to sell their house. Most of the time, the reason people don't want to sell their house during the holidays is because they don't want to show it. They don't want to go through all of the mental gymnastics you have to go through to list your house and get it on the market. Yeah. And so they say, I'm just going to wait until things are calmer at home. But that doesn't mean that if a buyer came through and was like, hey, we're willing to buy the house and it's not this, extraordinary effort. There's a lot of people that are, unofficially on the market, right? And so if you're an active A buyer and you have some clear wants and needs, it makes it easy. It makes it easier on our job to go find those sellers and say, hey, I saw that you had it listed earlier in the summer and it expired, because there's a ton of homes that have listed and not sold over this last year. Yeah. And the buyers can still be in the market and take advantage of rates if they do come down in a seasonal effect, which quarter four, right? You can see them coming back, probably not as significant amount, but even 1%, right? We're talking about $10,000 plus in purchasing power, right? Your qualification is a lot in that, even that 1% swing in interest rates.
Yeah, I don't know if we'll see a full 1% swing in a 30-year mortgage.
Yeah, well,
so I've seen in my experience a lot of savvy buyers
giving them a range though, right? Get an idea. Is if it does move 1%, what would that really impact on my ability to buy?
I think
it's like 10 grand.
I think the higher interest rates are starting to bake themselves into the equation more and more amongst the general economy. And so if you saw a dramatic decrease like 1% overnight, that really could send some signals that things are on the way down. That could be a shock to this. I mean, that's a pretty big move in mortgage rates to just drop it, 1%.
Yeah.
And the reason why I say that is the setup that would cause that without the Fed switching back to quantitative easing would be pretty drastic. There'd be some pretty major moves going on. And I think a lot of people...
That's too much movement in this short run.
That'd be a lot of volatility in mortgages.
Yeah. It's a good point.
You know what I mean?
To see what that would do to home prices.
Well,
it's so hard.
Everyone says, right? Okay. So everyone says, right, be greedy, be fearful when everyone's greedy and greedy when everyone's fearful. Everyone says it. It's super easy to repeat. It's super difficult to actually do when you see the mortgage rates drop 1% because bond markets or equity markets are blowing up and there's a flight to safety and there's a demand for bonds that are backed by assets. And you see this drop and everyone's going, well, I'm not buying now because everything's right. Like when they should get, quote unquote, according to that, they should be getting greedy. They then become fearful with everyone else. Right? Yeah. The fear is that natural instinct that takes over, and it's very difficult to fight against that, especially if you're about to put, your family's, what you guys may have put together for life savings or whatever to get into a home or a significant amount of money. It's
thinking about okay, am I in fear or am I in, is there opportunity? And I think by seeing this market be as stable as it is, I don't think there's really anything there's so many things that would have to change, especially on the supply side, to see, because I think the fear would be, the housing market crashes. Like this is when I hear that term, my mind immediately goes to home values go dramatically lower, right? Well, if you're trying to buy a house, like that would be a great situation, right? Like that's not that's a positive crash. It's like a good crash, right? It's only a crash for people that don't have equity in their house, right? So like thinking about what would have to cause like a crash, meaning home values have to go down dramatically. Supply has to legitimately triple. I think supply would have to triple and demand to stay low for us to have like a significant cliff drop off.
Well, what was our inventory like pre-COVID?
Massive. No, sorry. Like the last housing market crash, right? If you go back to that, our supply was like 6,000 homes.
Yeah.
But so like pre-COVID, if you go back,
I said pre-COVID, but really it was like technically
you're talking about like you're
pre-COVID.
talking
So like even like
UFC.
so this is sold listings. So this is sold listings, and it goes back to pre-COVID. I don't think we have pre-COVID like active inventory, but go back one page.
But
I'm sorry, forward right there. So like the new listings. So you can see like this running trade up. These are the new homes hitting the market, right? So basically February of 19 and 20, essentially, we had a similar active, home route. 18, 19, and 20 is almost pretty similar as far as like the number of active listings we had. And I think if you look at the full active listings, like between 14 and 1,600 homes.
Yeah. So the better question to ask then is the last.
And we're less than that. We're barely at 1,200, I think, right now.
Right. So the last market crash, we had 6,000 homes on the market.
Yeah.
We'd have to probably more than triple our inventory to really make
How many more homes do we have now on a total number, on an absolute basis? How many more homes do we have in the county than we did in 2008? Double?
Probably.
Probably 20,000.
Go to the next page real quick.
What's double the number of homes, 50% increase.
Back right there. Okay. So this is total dwellings. So I think we're gonna pace on new dwellings in 2022. Oh, I'm sorry, 2022. It says 1,983 homes is what we had year to date, and I think we finished the year at like 2,200 homes. We basically built between 1,900 and 2,500 homes per year for 9 years straight. So coming out of the thing. So
right.
it's like
we didn't build in
homes.
09, 10, 11, 12, and 13. There were 5 years where we didn't build
barely built anything.
I'm just trying to put into context like what it like is 6,000 homes. So 6,000 homes on the market in 2009 is what would that be? What would the equivalent of that be today? Really, because it really wouldn't be like 6,000 homes on the market. Would it be like
4,500?
Well, no, because
as a percentage of the whole,
as a percentage of the market, right? So how many homes as a percentage of the market are really available? Would we really need to see 9,000 or 10,000 homes on the market?
Well, and
really
I think it's a factor of the demand as well too, right? Yeah. It's like how many people want to buy. So how many people wanted to buy then versus wanted to buy now? Well, like the total number of home sales.
I'm not trying to make the case for. I'm not trying to make the case for something crashing or not or anything. I'm from a visualization standpoint. When somebody is concerned or saying, hey, the market's going to crash, what does that really look like? Okay, in 2008, it looked like 6,000 homes on the market from a supply standpoint. So we would, to see that, like, could you visualize, 10,000 homes being for sale on the market in the county right now when we have an active supply of, what was our active supply?
Like 1,200
homes, right? So you'd have to see, an 8 to 10 times increase in available homes. And when people sometimes visualize it in a different way and they say, well, that seems like that'd be like a lot of homes for sale. I don't know it seems like there'd be enough people willing to buy that we wouldn't get to that number. Mm-hmm. Well, then what you're saying is that as prices would start to drop, that people would enter the market and say, I see the value equation has now changed for me. The market still might be going down, but this is an entry point where I feel comfortable. And that's what forms support in the market, right? Just from a technical standpoint. Yeah. So the fear around the crash, you got to remember there is a support level somewhere and the market will come to determine where that is. And I don't know or even necessarily believe that we are facing a housing crash. Yeah. There could be markets out there that are going to have significantly more drawdown, but I think the local market here is actually doing pretty okay.
Yeah, I think so too.